The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to another edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host at TFNN, your headquarters for technical trading and investing. And having kind of a standard day and going into a three-day extended weekend in the summer. And there's a few things, if you are new to trading, that I always like to remind people. The first is that this is the first big weekend of the Hamptons, where everybody that's a big shot on Wall Street has a house, and they all go to impress each other. So they all have a house that they get to go to about 3 weekends a year, of course, because they're working 90 hours the rest of the week. So they have a big, fat, expensive house out there, and they get 3 long weekends a year, and they like to extend them a little bit. So normally around noon, 2 o'clock on Thursdays, the big guys that are out of there, the B team, trading team comes in. What is their single mission statement? What is the single thing they're told to do? Don't let this market move. Don't let any stocks move up and down. I want you to kill all volatility. All volatility must die. We want no movement. And that's generally what you get. Now, this is a little different in that we've had a huge crash in Japan. They're trying to put as much lipstick on this pig as they can, and it is one of those things where they're going to continue trying to do that right up into the close. So look for extremely light volume, which I'm sure we have. In fact, let's check on that right now. What do we have? 1.8 billion shares on the consolidated New York Stock Exchange tape. Well, we're off 3 points. We did go and test yesterday's low within a point or two, but I just suspect this is more noise. The most important thing will be what Japan does and Asia does on Monday. I know that they've been doing some triage, and for all I know, Ben Bernanke shoveled yet another $1 trillion over into Asian banks to prop everything up. My guess is that we're going to probably see 3 major gap down, huge day down in China. Once you get these huge corrections, like the 8% correction you had, normally there are aftershocks, just like a earthquake. You're going to get at least a few more, and because there's normally huge displacement because of those. None of the data has changed. We are seeing all of Europe and most of China head into recessionary territory. China less so. Japan, they just inflated that balloon until it busted. Unfortunately, or well, I guess we should know, even traders that have only been traders since the dot-com bubble know the after effects of what happens when the bubble bursts. But we're probably going to continue seeing that. I suspect Bernanke is throwing more money at the situation because, of course, that's what he believes will fix it. 4 years of throwing money at it doesn't seem to have done it. But we shall see. Anyway, we've had decent moves out here in the market today. But again, it's all about stomping down volatility between now and the close. They are normally there till at least 1 or 2 on Tuesday. Now the question is going to be, and my guess is, are those Hampton folks going to be all headed back to New York Monday night, or are they going to be headed back on Tuesday morning as they normally do? My guess is going to be, what does Japan do on Sunday and overnight on Monday? If things really start moving, they will have to come back early, and they will be none too pleased. There was a website, and I wish I would have written it down this morning, that showed the helicopter traffic headed up to the Hamptons, which is on the far end of Long Island, if you've never been up in the New York area. I was up to one of those Hampton houses once, but it's been so long ago I can only vaguely remember being stuck in traffic and thinking, well, isn't it just a few miles up here? Long Island can't, I guess it's long for a reason, but can it really be that long? But I guess road traffic can take 3 or 4 hours this time of year. But it's been 15, 20 years since I've been up there. Of course, Richie Rich and his Rich Bunch, dripping with money, is always the idea of what Hamptons are. Of course, they have some incredibly expensive houses up there. That's normally what we think of. And of course, if you like Royal Pains on USA, which is kind of a neat little and cute little, I don't know if you'd call it a sitcom, but it's probably about the closest thing to a sitcom. Kind of interesting, and shows a lot of those people up there. But they tend to be from Wall Street, willing to spend as much money as necessary to impress everybody else with their houses. And, of course, if you ever lived in New York, I'm sure that the property taxes alone on those would be enough to crush almost every one of us trading here on a daily basis. So we've got this market for 1646 on the S&P cash. Not a lot of movement out here. We've had a few things going on. We're going to get to those. At the bottom of the hour, we had a flash crash yet again in utility stocks earlier this week. There are some reasons for that, and we're going to talk with Eric Hunsader. He is from Nanex. Those that have listened to my show since the beginning of time, which I say is when this show started, we had him on just a few days after the flash crash. He offered probably the best explanation of what caused it. He's out again talking about why some of these things are blowing up in our faces yet again today, and how the market is actually the structure of the market, and how it's going to change in August. I think anybody that is trading on shorter time frames and or has money in the market's going to wonder why the markets are different in the last 30 minutes of the day. Why do we see so much volume in the last 30 minutes of the day? There is almost always an organic reason besides what we've normally seen and the huge volumes at the end of the day, but there is a reason, and we're going to get into it. It's a structural reason, and one that pushed upon us by the SEC. He has a differing opinion on what the effects, practical effects are, but in the bottom of the hour. So if you're in the den, make sure you listen to it. It's going to be kind of a quiet day. I know that a lot of traders leave early. We also going to have a action-packed adventurous episode of the Tech Insider on, I think, the first hour of Tom O'Brien show tonight. So make sure and tune into that also. We had a few stocks moving out here. It's Sears Holding, SHLD. And that is Sears Holding. And, of course, that bar tick almost hit the floor out here. Boy, what a movement out here. We've been talking about the Walking Dead stocks, stocks like Radio Shack, RIM, or what are they calling themselves now? BlackBerry. But, of course, their stock doesn't say that, BBRY, I think. But we've got a lot of these Walking Dead stocks, and the problem is they're dead, or mostly dead if you're a Princess Bride fan. But most of these stocks are mostly dead, but not totally dead. And the problem is the short interest is so high on these things that the only people that can truly hold these are funds that don't have to worry about their wife calling them asking why they're so short Sears. Anyway, Sears came out. Basically, the information suggests that they are dead. They have this total flaky idea they're trying to push out, and this is when the thing got torn apart yesterday. People didn't like the news, but then when they started talking about putting towers on their existing locations and maybe just taking everything out of them and making them data centers, there was a whole bunch of flaky ideas of how they could use the retail space, of which they have about 25 million square feet across the nation. They are within 10 miles of 70% of the population. So again, it's kind of a Radio Shack deal. Radio Shack, they're pretty much not dead because someone thinks that someone will eventually step in and buy them just to have all those locations. I think it's something like that. I think Radio Shack is like 85% of all Radio Shacks are within 85% of the population in the United States. but of course a much smaller store. But even if you didn't want the horrible Radio Shack part of it, you could buy them up and have stores and locations across the nation tomorrow morning. We'll say that you were starting a new business, you were Microsoft, Apple, and you wanted all those stores, and you wanted them with people and employees and put together in 60 days, you certainly could have that. And there's not a lot of easy ways to do that. A lot of times it takes a long time to build those out, find good locations. This way, most of that work would already be done. Anyway, Sears Holdings slammed down over 7 million shares, or yeah, we're over 7 million shares now, and coming back into this gap that's just under the $45 level. We'll go here and look just a little bit farther. But you know, if all you can do, oh boy, we've got Disco Steve in there, and his daughter's trying to stick her finger in his ear. So we'll have to. I guess she gets bored fairly easy. Pippa? Okay. So anyway, we've got her in here today. Huh? Kashi? Okay. What's this Pippa business? Oh. All I could see is the Pippa all over the IM. So, yeah, what do we have? So anyway, we've got this movement. We've got Disco Steve that would like to talk to you. You can give us a call at 877-927-6648. He's got his little funny golf hat on backwards today. So tell him to put it on straight and fly right, and get rid of the goofy hats, and quit playing disco music, because we all know the Power Trading Hour is 100% disco free from now on. Anyway, we got other things we're going to look at, but we had that Salesforce.com CRM is also out. I wrote about another company in this space that I think is coming on in a hurry today. And it's down, fairly decent volume, and you know, let's see what we're going to be headed in. A lot of these stocks, if the market continues to pull back, which I believe it will, you could see this thing coming back into the $37 range. This is when this thing had the last big volume push, and let's see, let's go back just a little bit higher. I mean, we had a fairly decent signal out here that on CRM, it broke the March 11th high, which is $46.98 with 9.5 million shares. Broke it, went right back below it. A clear sell signal on this thing. $47.58 with 7.1 million shares. So 20% light, comes back in. The trading range would have been a decent sell signal. One of the other things, if you're watching on Tiger TV, she had a nice move up with a lot of energy from 34.76 to that 46.98 from March 11th. And just a classic double top out here. Lighter volume, rolls over. I would have liked to seen a little lighter volume and energy on this last leg up to pull the trigger on it short, but certainly looks like we've got some decent movement on this thing on the downside. We shall be back in just a minute. Again, at the bottom of the hour, Eric Hunsetter from Nanex.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we are looking at a market that, again, you can't expect a lot of movement out of going into a 3-day weekend. Again, I think a lot of the risk out here is going to be overnight risk on Sunday and Monday night when, of course, you can't trade equities, and that's normally why you get a lot of movement out here. We've had a second test down here at 1635, and most people would get awful excited. What you don't want to see is a lot of up movement on light volume. We certainly have light volume, 1.9 billion shares on the consolidated New York Stock Exchange tape. Other than that, for the most part, not a lot of movement in all these particular stocks. We've got some short squeezes continuing on, but what can you say? What I wanted to get to, Intuitive Surgical. I'm trying to remember who called and asked about trading Intuitive Surgical. And I think that they called on this last low back here, maybe April 19th, when this thing got into to the previous low. And we talked about it, and it was all about what is headline risk. And this is exactly when you have lots of lawsuits floating around, you have other things, even on a light day like this, very hard to figure out what a particular stock is going to do when you're actually trying to trade the next headline out of it, and holding it overnight is almost impossible. Intuitive Surgical had some decent news. I've said that I thought that there was some political motivation in trying to go after Intuitive Surgical. They have won their first lawsuit, and that's why this thing rocketed up today. I suspect they're going to probably go and look through the rest of them. I'm going to have knee surgery on Tuesday of next week, so won't be back here on Tuesday. We'll be back on Wednesday via my home connection. So we'll be looking at doing that. But what I want to say is I'm pretty sure we're going to be using that machine, and we'll be talking about that. We've got Tom from Atlanta. How you doing, Tom?
Hey, good. What do you think about Facebook right now? How low can we go? Fibonacci's waiting at 0.50 there.
I think it's a $5 to $8 stock. I think
you think so?
I think it's always been.
Yeah, but they pump it out to retailers.
Yes, I know. But
hey, if you know the Leucotomists, the Catholic organization, met this Wednesday, and that's when the stock market started cracking.
Mm-hmm.
They told that other guy that runs the show at 5 o'clock, that Catholic organization, whenever they have a meeting, something always goes on with the stock market.
Well, I don't know if I would buy that.
Where do you think you can get to Facebook before the next pummel? Don't even touch it.
I mean, you're basically testing at the current time. You're testing the previous low on lighter volume. I think
Lighter has 30 million shares today.
35 against 52.
Yeah. So what are we?
So I think you could bounce out of here. I'm just...
Think so?
Yeah.
Is that buying or selling pressure right now? It looks like selling.
Oh, I think it's selling, but I think you're probably going to get a bounce out of this thing on Tuesday, and you might...
The dollar's going to go lower? Is that the whole... If you notice, the whole reason the market's been doing what it's doing is the dollar's getting crashed again.
You mean... I think it's going up.
Smacking it around.
Yeah, I think it's going higher. I think
What about the debt ceiling? I forgot about that this weekend.
Yep. They know that no one's going to fight over that. They've got other things to fight about now. Debt ceiling's not going to be one of them. Here's my call on Facebook. I don't think it has a lot to do with what the market's going to be doing. I think it has a lot more to do with what the amount of money that Facebook can bring in for mobile advertisers. When this thing went public, they had a good amount of, how would I say this, retail business, but most of the kids that were using Facebook up in a year and a half before Facebook went public were all doing it from home and sitting on a computer and spending several hours a night playing with it. What we have now is a move in Facebook to actually go and be used on mobile devices. People spend 5-10 minutes on it now, and they're gone. They're not sitting around spending all the time on it. And even when you talk to younger kids, they kind of look at, the high schoolers of 5 years ago used Facebook. I'm on Twitter now. That's all I care about. I'm an Instagram person. So to some extent, I think that this is somewhat a fad. And is it still worth something? Yeah. Was it ever worth $100 billion? No. Is it worth 10? That's kind of my idea. And I think that's when the numbers line back up. It's probably worth about $8 right now if they can figure out how to really make money off of all these users they have. Then that's different. They have not so far. So I think it's an $8 stock.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. The advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
For those that have listened to my radio show and the podcast and the webcast and been on Tiger TV since the first days I started broadcasting on TFNN, within just, I don't know, a month or so, we had the flash crash. And one of the first guests I had on the show was Eric Hunsader. He is from Nanex. I want to keep on saying Nadex. Nanex. It is a different company since we do have an advertiser, Nadex, just so you know, Nanex. They specialize on basically stock market data, but not just high, low, open, close. Every quote, every tick, anything that you can measure, they put a caliper to it, and they save that data. Eric has been at the forefront of figuring out what went wrong with Flash Crash, and he's actually talking about why we're having problems this week in some electric power companies. I want to welcome back to our show Eric Hunsader. How are you doing today?
Hi, thank you for having me.
Thanks for coming on. So we've had a market that has some, I would say, organic reasons to having a volatility in the early morning and the early afternoon. Can you explain those to us?
Yes, in the first part of the day, the first 15 minutes, and the last half an hour, we don't have any circuit breakers.
And that means there's zero circuit breakers. It could go up 50%, down 50%, up 50%, doesn't matter, right?
Yeah, pretty much.
And so what did we see this week for AEP, and what does your data suggest?
It looks to us like somebody put in a market order, and instead of getting a market price, they got the worst possible prices that somebody could get away with giving to them.
So all the people on Wall Street, they're just big, lovable guys that want to make sure that everybody gets a decent break.
Well, they're lovable computers owned by the lovable guy.
Okay. So we've got a market that basically has a liquidity problem and probably even brought on every day. In fact, you can drop a dime between 2 and 3:30, and there's just not much going on. Light volume, and then we get all the volume at the end of the day. Probably no coincidence there, right?
Right. In fact, the last millisecond of the day is extremely active and can equal 30 minutes of trading.
So we actually, in response to the flash crash, they actually changed the way things work, and that's why this is happening now, right?
Well, yes, they came out with the new circuit breakers called Limit Up, Limit Down, and in the course of rolling them out, it won't be until August that this new circuit breaker works throughout the entire day.
Do you know the charts?
I don't know. It's a day in August.
Okay, we'll look it up. But I'm trying to remember. I thought something like the 15th or the 18th, when volume probably normally is about as low as it gets at the end of the summer. So maybe not a bad time to actually put that on if they do it, right?
Well, except for August 2011, which set records.
There's always the outlier, isn't there?
Correct.
Okay, so now that you've seen the responses, we saw an article, or at least comments from you in an article this week that basically suggested that they probably really hadn't tested any of this, at least the SEC, right?
Well, it's pretty amazing, actually. They designed Limit Up, Limit Down specifically in response to what happened on the flash crash, and I've not heard anybody ever say that they actually tested it on flash crash data. In fact, I'm pretty sure they didn't, but no one is admitting.
So, as far as we can tell, Bart Chilton, who's a commissioner, actually is the face of most of this. At least he's the one talking about it the most. Is there any real sense that you get that these people really understand the problem, since most of these people are not coming from trader backgrounds? They aren't hackers and physicists working on trading in nanosecond time frames, really understand all the plumbing that goes into how the market truly works these days. The days of anybody actually handing paper back and forth to each other on the floor are long gone.
Right. Yes, I mean, one of the things that this Limit Up, Limit Down is not a simple solution, which is unfortunate because Wall Street abhors uncertainty, and you will get uncertainty when you throw a new complex system into an already complex network of trading.
I've always tried to talk about how F-16 Eagles, I have 3 different computers, and as long as 2 of them agree, everything's fine. If 2 don't agree, you get automatically ejected. Or that's how the original F-16s actually worked. You were getting out of that plane one way or the other because it would just fly apart if it couldn't make 1,000 different adjustments to the flight controls every second. It was an unstable system. And I guess to some extent, I almost see the same kind of thing. If we're not constantly vigilant here, if the market even starts to move out of standard parameters, we see what an unstable market could do.
Right, just 12 words tweeted at the right time sent our market into absolute chaos.
Have you done anything or work on any markets outside the U.S., like Japan in its crash over the last few days?
Yes, we've been asked by and government officials and central banks from around the world to individual markets.
Anything on that already that you've published already? I know on your website you do have a lot of interesting I guess, white papers on what's going on actually inside the marketplace. I didn't know if you have anything out on that yet.
For Japan, no. That was actually a pretty slow mover. It moved about 30 times slower, about the same scale as our flash crash, but it was about 30 times slower, so it wasn't really a flash crash.
Do you think a limit up, limit down actually is going to do what is needed, and it's not the whole day, or unmake a stable system for us to trade in?
Well, you know, I don't like to be a naysayer, but this is an absolute disaster what happened. Limit up, limit down. If they had tested it on real flash crash data, which we actually did, we took the time out to put those rules in place for that day. And what we found was astounding. It would have, on that day, frozen large cap stocks like IBM, Caterpillar, you name it, the top 30 stocks, actually a lot of large caps, most of the large cap stocks would have been halted at the lows. And one of the saving graces of the flash crash is that it happened so quick, a lot of people didn't have time to react and make, the wrong decisions. Here, limit up, limit down would have pretty much halted us down 1,000 points. What would have happened after that, I don't know, but I kind of think we wouldn't have gotten the same bounce.
I guess the question is, will that make equity markets start trading like commodity markets, where you keep hitting this limit down, and the market's locked for the rest of the day? You open up the next day, huge gap down, and of course it instantly locks. In fact, we had somebody on here that back in 2000, and he'd taken $10,000, turned it into $1.5 million, and in 5 days it was all gone.
It was not at all like that, because the limits, they're not absolute price. After a certain amount of time elapses, it will open up again and just allow it to continue to trade in whatever direction it wants to trade.
Do you have an idea, you think, that was something that would work better? Oh,
absolutely. The CME that was actually only delayed or halted for 5 seconds of time is just a stellar example of technology done right. NYSE's liquidity replenishment point system, although not ideal, again prevented. They had very few cancels on that day. It was mostly in NASDAQ and other stocks. Again, proven track works. It just boggles the mind that they would design something new by committee, apparently by people who don't have a lot of experience working with market data, and to lay that egg that they've laid.
Well, I did send you that quote. I hope you read it.
Yes, it's a good one.
I should have written it down and brought it with me here, but it's Groucho Marx, something about the government's job is to look for trouble, find it everywhere, prescribe the wrong solutions, and put it into gear to make sure that everything is as messed up as possible. But I guess my other question is, there was a lot of issues with quote stuffing and slowing down the market. Quote stuffing, have the computers gotten fast enough so that they can't continue that kind of operation?
No, in fact, it's become worse. Try to hide it by spreading it out across multiple symbols, or instead of, a lot of the exchanges measure, they'll bunch all of this nonsense information into, it's like it's within norm, but much higher. For example, you might see, we just saw the other day something in Johnson & Johnson, where on a 1 second basis it looked like maybe 400 or 500 quotes in that 1 second. But if you look at it on a millisecond basis, which is the rate, it was actually 100,000 per second. That was the rate. So it's just crazy that they're changing these orders faster than the speed of light can deliver them to anyone.
I read something interesting about technology going into the NYSE Super Center, which is actually in New Jersey. Everybody always thinks that all the stocks are traded in New York for some reason, and actually everything's in a big computer system in New Jersey, kind of hidden.
Yes, and they're all. It's fascinating actually because they've all kind of agreed amongst themselves. The people who are co-located that they were all going to self-limit themselves to 1 microsecond. So while they talk in public is better, and that's the way of new technology. So nobody can have an advantage under 1 microsecond, and the reason is because they don't want to spend each other to death.
Well, I read that someone started cheating and using a microwave system inside that building so that they could actually make it faster, and someone else caught them, and now that whole thing has turned into a bugaboo. I guess it's honor among thieves. But yeah, there was a whole thing in there about someone figured out that they could put a microwave system in there that was built like in the 60s to transfer the data, and it would be much faster, and no one would catch them with the length of the wire, which actually a lot of times, especially in scientific applications, if they want to change the timing of super accurate systems, they just put on a cable.
That's right. 1 foot is a nanosecond or a billionth of a second.
Yeah, so I just thought it was kind of funny when I read that, and I don't know what the final solution was of that using the microwave system in there and actually being, I don't know, several nanoseconds faster than anybody else on that trading floor. But I knew it caused a big brouhaha. That was like, I don't know, 4 or 6 weeks ago. So I didn't really get into it. We got a couple being on, which really explain it. And I think a lot of people probably new to the show don't understand what that is. Maybe we can wrap up with that.
Well, yeah, it's a little, yeah, okay, sure. It's a quite complex topic, but basically speed is everything on Wall Street in any way that it's not necessary for you than the other guy. There's this old joke about 2 runners running or 2 hikers in a forest, and they tumble upon it, and one hiker quick drops down and he starts throwing on his running shoes, and the other guy says, "What are you doing? You can't outrun a bear." And his response, "Outrun you." And that's a lot what the mentality is. They do that is just to their advantage.
So, but the actual quote stuffing is really just firing away and putting in quotes in the system to slow it down, but not actually execute.
Not only to slow it down, but to cause other to maybe route the order somewhere else, and that will cause a miss, and then latency or time against actually come out.
So it's a feedback loop that makes it go down.
Yes.
Okay, so for people that aren't really technical, basically it's the old thing of throwing the shoes into the machinery to kind of cause a little sabotage. I want to thank you very much, Eric. We'll have you on again real soon to see, maybe back in August, and see when this thing rolls out what actually happens. Thanks again, Eric.
All right, you're welcome. Bye.
Bye.
An edge in the market, something that can stack the odds in what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you what you're looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind, and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped some producing gold companies. And now's a great time to sign up for a free month-long trial kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get you today by visiting the front page tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most market investments. Its newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. By 2000, Microsoft is the key to these massive long-term profits, and the Tech Insider is the vehicle TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the...
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I said,
Mastering Probability is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any goal. Whatever you call it, winners find a way, because your journey to
.com.
Welcome back. We're going to finish up the week out here. Just wanted to remind you that week going on, it's 20% bonus match on whatever amount you purchase. Will be donated to the one in your name, so you get the deduction. And free admission to both of Tom's 3-hour live webinars. Learn the skills of professional traders. And I believe, he's going to be talking about this trading options expiration into expiration, which is, if you've never found it doesn't happen all the time, but when you find a market that moves every expiration day, Tom, even before I started becoming a trader, used to listen to Tom play the OEX options expiration. I found a couple of in 2004, 2005, there was some big money to be made in gold expiration movements. And, it's something that you can learn every day, but boy, with a very limited downside, 10, 25 cent options. And again, you're going to get that 2 of Tom's 3-hour webinars on that, plus all the other things in the Tiger Dollar promotion. And of course, we're going to be getting and moving out of the promotional price on of timing the trade charts in June. So letters from any of the contributors on TFNN to act. I don't know what it'll be today or over the weekend. I don't know if you'll flip a light switch or turn on the TV and think that, what I need to do is buy those Tiger Dollars now and start setting up for signing up for Art of the Charts or the Path of Least Resistance or the tech or in the newsletters or we have here at TFNN. Just wet our beak. We were talking. We're about we're almost flat on the day, which is not unexpected. Let me put it that way. Going into the 3-day weekend. We talked about CRM, we talked about Surgical, we talked about Sears Holdings, A&F. I haven't looked at that yet today. let's take a look at that. That has been moving. This one is down fairly strong. And how do we have that? Well, of course, they've been in a war of words about whether they want just the beautiful kids to be wearing their clothes, but they had some news out today down on monstrous volume. Of course, they came down, actually went through a little gap just above $4. And of course, I only like to say a gap is filled when the terribly out lows. My guess would be with this kind of volume, we're going to go back and chase this high volume low back around February 26th at 44.35. So keep an eye out for some of these retailers. They've been weak. Catch me in, I think it's going to be the first hour of the Tom O'Brien Show. We'll be talking a lot about technology in a broad sense. And I think we'll see you next week. Same bat channel, same bat time.